This is probably the perfect time to return to emerging markets. We in fact think that 2015 is going to be a banner year for emerging markets and might surprise a lot of the investors on the upside. Let me tell you why we think this is going to be a good year for the emerging markets. First and foremost is the reforms. The reforms are coming in at a very rapid pace in many of the countries, and these are countries like India, Indonesia, Mexico, Taiwan, and they are coming into forms of the secular reforms. The second most thing which comes to my mind is actually the deflation fighting mechanisms being put in by China. This is in form of the liquidity coming in as the RRR cuts, the interest rate cuts, and also the stock connect between Shanghai and Hong Kong. The last piece of this is the global liquidity being pumped in, and primarily from Europe and Japan. The global liquidity at some point is going to look for riskier assets at a reasonable valuation and providing good growth. And no other equity asset classes offer these three better than the emerging markets. We are bullish on India and China. So your portfolio reflects that because we are overweight both India and China. We are cautiously optimistic on Russia, but we have still maintained our underweight in Russia. In Brazil, the best we can say is we are cautious about Brazil. Now, India is a secular story. It's based on infrastructure, capex, and reforms. This is a secular story which is going to play out over the next 5 to 7 years very easily. China, on the other hand, is a very different story. It is a liquidity-driven story. China is fighting the same fight as Europe or Japan or United States, which is deflation and an aging demographics. So you see the liquidity coming in form of RRR cuts, in form of interest rate cuts. But at the same time, in China, we have avoided in your portfolio investing significant amounts in infrastructure-related or export-oriented parts of the economy and focusing only on the consumer part of the economy. In Russia, it has been why we said we are cautiously optimistic is because Russia has been the best performing country year to date as of March 31st for sure, and ruble has been also one of the strongest currencies. But Russia can always succumb to a geopolitical crisis or to an oil shock. Lastly, Brazil, we are cautious at best is because Brazil needs reforms. It needs serious reforms. Its current account deficit is ballooning. On top of that, its currency is weak, and it cannot rely on the commodities, which was its key source of growth in the prior decade. The long-term view is also something where we are very bullish. We are secular bull on Chinese economy, but we believe that this is where the investors and market is missing out, that China needs to reduce its GDP growth. What it needs to focus on the quality of the GDP growth, which is driven by the consumer and does not rely on the exports, does not rely on the fixed asset investments, which drove the Chinese economy in the prior decade.